Hey everybody, this is John and welcome to the free video. Let's dive right in. It's Monday afternoon, the markets are closed. And for the weekly chart on the Qs, we are sandwiched right in between the 8 and 21 EMA with the startings of a squeeze. All right, what does that mean? That means for the indexes, believe it or not, we're looking for things to, even though they've been volatile here on the daily charts, for things to quiet down and consolidate on the weekly charts. Most likely this will start in earnest after the election. So think of the election as, volatility kind of goes crazy into the election and then the event happens. And even though there's going to be, maybe a lot of uncertainty even the night of the election and the rest of the week, volatility just comes back down. That's what happens with every presidential election. And so what I would look for here, even though we're vacillating back and forth on the daily chart, really look at the consolidation and what's happening on the weekly chart. This is poised for, a big rip higher later in the year, most likely Q1 or lower, but at this point, because of the chart structure, it's pointing higher. And it's regardless of who wins. One of the things that getting a lot of questions about right now is, gosh, what happens if, this person wins or that person wins? But you'll notice that the stock market it's really focused on bigger things. It's focused on, is there deflation? Is there inflation? What's happening with the currencies? If we look at stock market performance here, first 3 years with Clinton, and this is not a scorecard, this is just, hey, this is what happens with the stock market. We had 57% here, 53% here, 43% here after the first 3 years, no matter who was in office. And so what I'm looking at here is not so much like, okay, if one candidate wins, it's good for stocks, and the other candidate wins, it's bad for stocks. It's, look, there's volatility and uncertainty, and once what's known is known, things go back to normal. And by normal, I don't mean that, of course, we go up, up, and away forever. Normal in terms of volatility coming back down. Okay, and when volatility comes back down, you start to see builds up of squeezes, and the squeezes give us an idea of the direction for the next move. So one of my favorite longer-term charts here. I'll talk more about this in the premium video as well. We've got a lot of nice things setting up in precious metals, some of the precious metal stocks and a few things like that. And I think right now, this is a good place to be. There's like one or two safe bets to make before the election that are high probability, but otherwise just hold on to your cash. There's going to be plenty of solid trades. I think the money this is going to be made this week on Thursday and Friday as the dust settles and people are scrambling out of positions that they loaded up onto before the election, and we can kind of step in and pick up the pieces. All right, so just this is just kind of every 4 years this happens, and from a trading perspective, we want to notice the patterns that happen every time, take advantage of them, and continue looking forward from that perspective. All right, hope it helps. You guys have a good one, and we'll see you at the next update.